Greetings, comrades. What we have here is a retro question from the VCE exam 2019. The essence of this question is a comparison of our two methods of depreciation that feature in the VCE course, namely straight line versus reducing balance. 12 marks on offer for this question, divided into 3 equal parts, 4 marks for A, B and C, respectively. Part A, I'll rip through this because this one students performed fairly well. So what we have to do for part A is record a GJ entry for the acquisition of the asset. So let's just zoom in and have a look at this question. Okay, so first thing to note, we've acquired the machinery for $220K, which includes the GST, so we need to factor that in terms of our calculation. And then same again for the installation. So the installation, $6,600, including the GST, is a cost incurred in getting the asset into a condition ready for use. So that is incorporated in the cost of the NCA. So in terms of the maths of this, let's just be mindful that we've spent $220K on our machinery, which includes the GST. So we divide that into 11 parts, and 1/11 of that is our GST, which is 20K on your calculator or in your head. And the other 10/11ths is your machinery cost, which is 200. 200 plus 220 plus 20 equals 220. Then we factor in the installation cost, 6,600. So same again. Take your 6,600, which includes the GST, so we divide that into 11 parts. 1/11 of that will be the GST, which is 600, and the other 10/11ths, 6,000, will be your installation. So add those two figures to get for both, respectively, and the cost of our machinery is 206K. Our GST, 10% of that will be 20,600. So now we're ready to do our GJ entries. So let's just move over to the right here. And just to make things nice and neat, prepared this earlier. So we've got a $206,000 asset, as we worked out over here. Asset going up means a debit. We need to do a debit entry for our GST because that's going to reduce our GST liability given it was a purchase. And the question itself actually referenced a source document of a check 450. So therefore we know that this is a cash purchase, and because of that means we've got a bank cross-reference here in terms of the acquisition. So therefore we need our bank balance is going down by the sum of those two figures. Then we get to part B. Part B, the business is deciding whether to depreciate the machinery using straight line or reducing balance. Calculate the amount that would be reported at the end of June. So that's important in terms of the date. We've acquired the asset on the 1st of April. We're doing the depreciation adjustment 3 months later. We've got to factor in all of April, May and June. So we need to be mindful of that in terms of our calculations. There's 4 marks on offer here. So we'll start with the straight line calculation. So based on the formula, we need 3 figures. We've just worked out the first figure, the cost of the asset. We need our residual value, that's specified in the question here, 11,600. And our UL is 10 years as it specifies right here. So given there's 4 marks on offer for this question, good idea to show your workings, because if we make a calculation error, at least you can get some marks for your workings out. And so the main workings out we want to show for calculating straight line is start with the formula. Pretty much the only formula you need to memorize for the exam, the cost of the asset minus the RV over the useful life. So our cost was 206k. We worked that out before. The 11.6 residual value and the 10-year useful life, they're specified in the stem of the question. So therefore, a full year's depreciation, if we bang that in our calculator, will be 19. So that's 19,000. Oh, this is ugly. Anyway, 19,440 per annum. Okay, sorry, that's a bit messy. And then we're going to divide that by 4 because we're only claiming 3 months, 1st of April through to 30th of June. So that's a common trap. Be careful of your dates. And you should end up with $4,860. Now, we need to work out the RB value. So back to the question, it tells us that we're using an RB percentage of 25%. Again, we need to factor in the dates. So the calculation's a bit more simplistic for the RB method because we just take that historical cost, 206k, multiply that by the RB percentage, 25%. So that will give us the full year's calculation. That's 51.5k per year. Again, we need to factor in that we're only claiming a quarter of the year from 1st of April to 30th of June. So then again, we need to divide that by 4. And we end up with 12,875, much higher figure because we're doing this in the earliest part of the useful life of the asset. Now, let's have a look at part C. The accountant recommended the RB method, saying it doesn't matter which method is used as it all works out the same in the end, and provides the following chart. Explain the accountant's comment. So it's given us a key here, and that's why they call it a straight line. It's a straight line in terms of the fact that we allocate the same amount of depreciation each year. And so often graphs like this, it'll reflect the carrying value. So this question's got a bit of a quirk in it in terms of it's actually tabulating over time the ACDEP. And so that's why the dashed line, the RB, we've got a big kind of gap here in the early part of the useful life. But then this is a key point. The owner's actually correct. We do end up at the same point. After 10 years, the estimated useful life, the ACDEP's the same, and that means the carrying values are the same. So let me give you some guidance on how to structure your response in terms of the 4 marks on offer, because the average, state average for this, was 1.9 out of 4, so slightly less than 50%. So students struggled with this question. We kind of got a bit of a bell curve effect in terms of getting a bit of a spread in terms of not many 4s, not many 0s, a lot of students getting in the 1s, 2s and 3s. So whenever there's a comment made by the accountant, the owner, etc., then 1 mark is basically allocated for acknowledging that comment. So you've got a couple of options here. You either say that the accountant is correct, so sorry for that typo there, or incorrect. In this case, if we refer to the graph, the accountant is correct. Both methods result in the same amount of depreciation over the useful life. So, and the carrying value will be the same. So 1 mark if you've simply stated that the accountant is correct. Sorry for the typos. Then in terms of the other 3 marks, you've got 1 mark if you've said, however, the amount of depreciation allocated each year will vary depending on which method is used. So acknowledging the fact that if we look at the individual years, the 10 years of the useful life, there is going to be variation. Then the other 2 marks are for differentiating the 2 methods. So with the RB method, you're specifying that there's a higher allocation of depreciation in the early years of the life of the asset because, again, we allocated 25% based on that formula. Whereas straight line, there's a higher allocation of the cost relatively in the latter years of the useful life. And then the third mark, final mark, and not many students pick this up, is for basically going into bat for one of the methods. So in this case, because machinery has a lot of moving parts, it's going to contribute more to revenue indirectly in the early years of its useful life when it's running very efficiently. So therefore, the rationale should be, let's go with the reducing balance approach. It's a more appropriate method for machinery as opposed to the straight line method, which you would use if there was an even contribution to revenue over the useful life of the asset. Apologies for the typos.